Okay, good morning, gents, and welcome to Market Wrap for yesterday. We will be doing Thursday night stock charts live tonight, and I am on the PC microphone again. It didn't sound bad yesterday, so hopefully it sounds just as good, if not better, today. When I say PC, I mean the laptop. Okay, so I have Franklin's requests from yesterday, GLNG and Joe. We're going to go over. I'll go over those first so I don't forget. So let's do it now because I'll be kicking myself later. All right, first off is Golar. A really nice breakout yesterday. I mean, wow, a great move. Definitely a continuation breakout. Here's your support way down here, which acted as a wedge formation from which the breakout occurred. This is a rock solid chart. Stokes rising, doing everything you want them to do. Get rid of that. This. Higher lows, higher highs. You may be looking at RSI saying, are we overbought? No, it's just a sign of strength. I would worry about this once RSI gets above 85. And I think it's entirely possible that it does. So it's looking good here. Odds favor bulls, no doubt about it. See if there's any storm clouds on the horizon in terms of weekly resistance. Nothing there. Monthly resistance. I think we have a moonshot here up to prior highs at 34.55. Where did we close yesterday? 29.65 is the prior high. We closed just above the prior highs of the month of, I believe it's October, if I can get this right. Yeah, no, November of 2018. November 2018, the highs we closed 3 cents above. And those were intra-month highs. So this is a real serious breakout here on Golar. I like it a lot, and I think it goes up higher. Joe, that's a Tectrum fund, I believe. Coffee. For the record, it is not a Tectrum fund. It is an iPath fund. Let's go find that. Whew, wow. Big move here. Obviously, it's extended dramatically into the third standard deviation Bollinger Band. We've seen that before, and it generally doesn't end well. Like back here, we didn't even hit it, and we rolled over. Back here, we rolled over. Back here, we paused, then rallied. So, you know, this could move up higher. The ideal scenario here is that we trade sideways, alleviating this overbought condition, and then proceed higher. RSI is not overbought. Sorry for the background noise. RSI is not overbought. It can continue up higher. Stokes are looking good here. The only concern I have is the real serious move here. And that's all this is a measure of the historical move of Joe during, I think it's the past 20 days. So this is a big move. But the path of least resistance appears to be higher. Volume bars are rising. Weekly view, I mean, what can you say? I mean, it's a major breakout here. One where I think that we're probably going to retrace in the coming week or weeks back down to 64. So one thought here would be to perhaps scale a little bit out, making some profits real, then re-entering on a pullback, which may or may not happen, right? But we know the probabilities favor that occurring at some point in time. The weekly RSI, Stokes look very strong. So this is looking very good. I mean, monthly chart looks very powerful. We are at current above the highs of June the 1st. So coffee appears to want to go higher, with the only caveat and concern being the proximity to the 3 and 2 standard, for that matter, deviation Bollinger Bands. But no reason to go dumping the position outright. All right, before we get into the closing price action from yesterday, let's talk a little bit about the economic data released. over the past couple of days. And on Tuesday, we had the U.S. Manufacturing PMI, Purchasing Managers Index, come out. It missed expectations, but still expansion. Any read above 50 is a sign of expansion. Any read below is a sign of contraction. The PMI for services, that really missed. And they changed this number, the median forecast. Last time I went over this was I think at 50, if memory serves. They reduced this just in advance of the report, and it bombed. It missed by a long shot, and it came in lower than the prior read, which was a contraction read of 47.3. Then yesterday you got durable goods. Durable goods missed by a mile. So we've been talking about watching durable goods because all you've seen is consumer credit skyrocket. So we know what they're doing with that credit. They're buying groceries and gasoline. So if we want to look for a reason as to why the markets rallied over the past couple of days, look no further than bad news is good news. Now today we get, I think this is the second read, the revision, for GDP for Q2. Initial jobless claims coming out at 8:30. And tomorrow we get PCE. So that's the Fed's favorite inflation index. We have Jackson Hole and UMich sentiment survey. So a lot of economic data coming out today and tomorrow, along with the Fed heads and their moronic idiocy of manipulation. So it'll be interesting to see what they have to say in the face of very, very weak economic data. And of course, we have the president out bailing out student loan debt. Guess who's going to finance that? You guessed it, you and me. Let's get to it. All right, so the 10-year yield continues to press up higher. We closed out the session yesterday at 3.1 6. Yet equities were able to eke out gains. And I do think that we are going to pull back here, because when you take a look at the TLT, it's very oversold on Stokes, and we are pressing down very, very hard into that 2 standard deviation Bollinger Band, which is nothing that would necessarily imply that we must rally, but these candlesticks are implying indecision. Right? Yesterday was almost a doji star. The day before, we rallied, then we stayed in a tight trading range all day. Very small bodies on the 2 preceding days prior to that. So this tells me that we're probably going to rally fairly soon. On the TLT, it's probably going to be short-lived, and yields will pull back and then resume back up higher. VIX, daily chart, big reversal day yesterday. We may, in fact, fill the gap that opened up 3 days ago. Stokes still look healthy. So while this is an ugly reversal bar, one of the technical reasons is that you have, obviously, the 50-day crossing down below. The 200-day non-technical are the poor economic reports from yesterday. It's counterintuitive, but it's reality. And not just yesterday, the day before. The dollar, this is a weekly view. We are off the highs of the week. We have not taken out the highs of July. Volume is huge. Let's go to a daily view. Daily view, the dollar closed up yesterday, but this is really topping action. When you get these black candlesticks, it's just like you saw back here. It's an identical candlestick back in July. It's usually implying that the trend is about to reverse. And in fact, let's take a look pre-market at futures. I should have started out with that, but I was worried about forgetting about Franklin's request. All right, gold is up $12.50 the ounce. Yields are up 3.11. Dollar is down but coming off the lows. VIX is down significantly. Let's take a look at the NASDAQ, of which we are hedged short. We're up over 3/4 of a percentage point on the session. So the futures look bullish for bears. But remember, folks, it, I really, really worry about bulls out there. I don't worry about bulls. I worry about numbers. I don't worry about bulls generally. But I worry about people forgetting that as we're pressing higher into real estate that technology does not do well in, and that is the real estate in the bond market, the yields above a 3 handle significantly now. We have a strong foothold above a 3 handle, and the NASDAQ is shrugging it off, at least in the pre-market session. So what I fear is that as yields proceed up higher, that the rug is going to get pulled out from a lot of bulls out there, and that's why we're carrying that hedge. Still, it's a profitable hedge, but I haven't let it go yet. All right, so back to the closing price actions. Go to the transports. Yesterday they moved up higher. Note the topping action. You're going to see this candlestick across the board by and large on indexes. Volume to the upside dropped off. Stokes are weak, down below 50. Rallies tend to fade. Watch out. Be careful. S&P 500, same deal here. Very similar candlestick as to the transports. We faded on the day. Resistance of 41.50. Volume weak. So all up days are not made equal. Same as down days are not all made equal. So I would not get lured into a false sense of security, especially with technology. The Qs, Stokes are nearing the 20 mark, both lines. Fast line is already down below there. Yesterday was not a bullish day. So we closed up, but we closed only 1 penny above. Serious resistance at 315. And I shouldn't say resistance, it should be support. Volume was no bueno. Small caps, second consecutive up day, but the 20-period moving average is acting as resistance. I would not get excited here. Volume is dropping off. The banks, all these candlesticks look the same. They rallied, they faded a little bit, up on very light volume. Discretionary names were up but faded. I feel like a broken record here. This is all the same price action. Staples, same deal. Energy, different story here. Very powerful move up higher. Volume is light, but just slightly below average. We are a bit extended relative to the 2 standard deviation. That doesn't mean it can't go up higher. It certainly can. It just means that there's a lot of demand. Now, as for food prices, they continue to trend up higher. We are back firmly above the 50-day moving average. Volume is okay, slightly below average. The prior day was well above average. LABU, firmly above a 10 handle. If you're looking to sell puts, I think the 10 strike is looking pretty good here. So LABU looking okay. Just keep in mind, these Stokes are declining. A lot of disappointment can happen when these Stokes are declining down below the 50 mark. So while this looks good, don't get overly enthusiastic. All too many times I've seen these Stokes, because remember, these are a momentum indicator, right? So it's just a measure of what momentum looks like. And this is not powerful momentum. It's actually very poor momentum. Influenced by and large by preceding price action. Yes, it's improving, but it's going to take improving, but it's going to take time to heal, meaning hook back up and get into a positive right mind. As for emerging markets, Stokes are oversold. We held 30, let's call it 35. Volume's horrible. Now, this should take off if, in fact, the dollar does correct here. So, I mentioned, I forget what the symbol was, about the emerging market ETF ex-China a couple of weeks ago. But I'll look that up, and we'll take a look at that and see whether or not that's a candidate for a trade. Bitcoin continues to trend up higher with risk assets. This is not an overly bullish chart. To me, it looks like a bear flag setup. Moving on to commodities. We already did the DBA. Let's face it, commodities are looking pretty good here. This is a weekly chart of uranium, folks. This is a massive, I know somebody mentioned it in the forum earlier, I read it. that uranium is looking really strong, and they are right. I forget who posted it. My apologies for not remembering. I just glanced through on my phone. Uranium looking rock solid here. A huge outside reversal bar. Stokes looking good. RSI looking good. Let's go to a daily view. Daily chart looking like the monster it is. Moving up higher. We're probably going to retrace back down to 22. For those looking to get involved, that's your price point to look to get involved with. Wait till late in the day to make sure we close above that mark on a retest. Volume, awesome. As for gold, I'm not loving the price action here. This is limping up. I want to be bullish. I want to really be bullish, but I'm cautious. I guess we'll have to wait and see if the dollar pulls back here. As for the mining stocks, Nugget having an awesome week. We closed back above resistance. Technically, we did so the day before yesterday. Yesterday was a retest of the breakout point, and it held. It closed very strong up and into the highs of the session. It looks as though we're moving up higher. That puts our call position in jeopardy, that covered call position. So I'll have to make a decision about what to do with that. Right now, I'm going to sit tight. The put position, if we close above $30.50, which is where the call strike is, I'm probably going to roll the 29.50s up, maybe out and into next week. More to come on that. So the mining stocks look better than gold does. GDXJ, very similar price action as to NUGT, really rock solid, bullish key reversal bar. And we'll leave it off with Boyle daily view. Boyle pulled back, retested support. I think we're going to resume the rally here. Volume to the downside dropped off yesterday. MACD's not looking good, I got to say that. And that is it for this morning, folks. Oh, by the way, we did a trade yesterday on CRM, Salesforce. Sorry about the background noise. So, CRM reported, I didn't even take a look at the numbers. I just took a look at the price action. Was not good. Their earnings disappointed because all of these crooks downgraded the shares, but their price targets are still significantly above where we're trading at current. A lot of downgrades here. I'm trying to find the results. Here we go. Okayed buyback program, blah, blah, blah. Guides, Q3 EPS, 120 to 121 on revs, 1.82 versus 1.29, a big drop on EPS, and a measurable drop on forward-looking revenues. It looks as though they beat on EPS for Q2, but they missed. This is what I always look at. I look at the revenues. Those are sales. They missed on revenues. So that's why you're seeing the stock get beaten up here. Now, the game plan is that if implied volatility remains high, meaning above 50%, as noted here, as of the close yesterday, we're at 61%. I'll roll down the call side because we'll have a lot of profit up there, and we'll roll that down. Now, if implied volatility contracts dramatically, falls back down below 50%, we're just going to make profits real here and exit the trade, assuming that, of course, that we do have profits. We don't want to get cocky until we are out. All right, folks, everybody have a profitable trading day. I'll talk to you soon. Be well.